Let's talk politics, and we'll talk some other stuff as well. Zach Abraham, Chief Investment Officer of Bulwark Capital. Donald Trump is now the president of the United States, 47th president. And quite frankly, I think he's the acting president now because I think Biden's punted that thing and he's just dealing with stuff the way he needs to. But the excitement at the stock market, that was kind of a pumping thing the other day. It's like, it's up 1,500 points.
Yeah. Well, hey, you rocked again today. And everybody's looking at the Dow Jones. I'm going to tell you over and over, if you want a good metric of the stock market, look at the S&P. You were up another 0.8% today on the S&P. I think you're up 1.5% on the NASDAQ. And I think part of this, like you and I were talking about offline, I think part of this is just a relief rally because there's certainty around it now. I think that a lot of it is growth prospects for the next, let's say, 12 to 18 months going up just because Trump's pro-growth policies. And then the other part of it, too, is, the markets are pricing back out. Now that Trump's elected with control over the House and the Senate, he's going to re-extend the corporate tax cuts. So those hadn't been all the way priced back in, but they were starting to weigh. And so you've got the NASDAQ hitting a new all-time high today, up over 19,000. S&P a breath away from 6,000, which is wild to say. Funny story, man. I remember it doesn't even seem that long ago. I remember when the S&P hit an intraday low of 666 during the financial crisis.
Yeah.
And we're nearly 10x above that.
That's insane.
Yeah, I know. It is wild. And we're nearly 10x above it. And the cycle coming out of that mess was the worst growth cycle in our country's history, too. So it kind of tells you a lot of financial engineering has gone on
big time.
In the last 15 years. But this is where I think things could get really wild. And the reason I say that is everybody's like, last time Trump got elected, stock market's going to go ballistic. The last time Trump got elected, though, the market was trading at like 17 to 18 times earnings. Okay, today it's at 31.
Which is crazy.
Right. Which is nuts. Now, here's the other thing about it, man. It's not your grandparents' 31, right? Because you've got to go in there. You got to look at several things. First of all, you got to look at this adjusted EBITDA number, right? Like the adjustments these guys can make. I don't even know how it's legal via the SEC. It really doesn't make sense to me because when you put in the adjustments or take out the adjustments, we've looked at stocks that, you put in the adjustments, they got $1.2 billion of profit. You back the adjustments out and they're losing money, right? So, it's just nuts. But when you factor in just stock-based compensation, that alone probably means the S&P is a good 20 to 25% more expensive than it is on the surface. Because you know how the stock-based comp thing works, right?
Yeah.
So, let's say you got a developer making $400,000 a year. You pay him $150,000 a year in salary. You pay him $250,000 a year in stock options and RSUs, right? Those stock options and RSUs typically vest on a 5-year schedule. So you get dilution, but only 20% a year. But in the first year, you get to write off 100% of that compensation award as wages. So you're basically understating the cost of labor, which is understating the share count, which falsely inflates earnings per share, right? For a period of time. So let's say if you factor that in, maybe you're more like 35, 36 times earnings, but you got the Fed cutting again.
Yeah, what'd you make of that today?
I mean, what I think is interesting about what's going on here is I understand why they cut because inflation has been pretty relatively tame. The unemployment number has stayed below where they projected it to be, which you and I talked. We thought that was going to be the case. We thought, they were projecting they'd be at 4% unemployment by the end of the year. We didn't think so. We'll see what happens, but they're still only at 4.1. So I think when you look at the inflation picture, I understand why they cut 25 bips today. But when you look at the underlying economic picture plus Trump coming in, it's a little bit more of a head scratcher because, if you're cutting it all, what you're saying is that you think this economy and this market need help. I don't know. I don't know what metric you're looking at that would give you that.
No, because I didn't get a sense. It was almost like it was just like, yeah, we're cutting it because our job's not done, and that was it. There's no explanation. We're just cutting it. Our job's not done. There you go. No rhyme, no reason, kind of feel of anything, and that to me is just what are you going to do? Talk.
Well, the other thing it might be too is it might be them expediting a cut to keep Trump off their back because
Oh yeah, because
he probably wants him to take it back.
He's going to go in there and go take it down to 3.
Yeah. So and that was kind of the most interesting part of the session. Honestly, was when Trump came up and he was asked about whether Trump will keep him on. I have a feeling you're going to see some fireworks between those two because he was shockingly plain spoken for a Fed governor. When he said, if Trump asks you to step down, will you? And he looked at the camera and said, no.
Yeah.
And then he said, what if Trump tries to get in there and influence who's going to be Fed governor? And Powell goes, no, that's against the law. And it was just cold, hard, like, again, and when you think about how measured a guy like that is he doesn't walk up there and say,
he's not a funny haha guy.
No, and he's not going to insert a the unless it was pre-planned to be in the minutes, right?
Yeah.
And that was a very strong statement, and those two were going to butt heads. But here's the thing, I really hope, and I hope like so many other things. I think one of the things we've learned about Donald Trump, and this goes back as far as art of the deal, he's never going to ask for what he expects to get.
No.
Right? He's going to ask for a mile further.
Absolutely.
Right? So I'm hoping that's what he's saying. I think it would be an abject disaster if presidents were allowed to be involved in setting monetary policy.
Oh God, yeah. And
it would be a freaking disaster.
And the thing is, you got a guy who understands the monetary world, but understands sales and wants to supercharge stuff. And I mean, he already did that last time because he freaking basically made sure everybody knew you're not going to raise rates, not on my freaking watch.
Yeah. So it'll be, those two are going to butt heads at some point, and
which may not be the worst thing, man, because every once in a while it's nice to know there's some guardrails there for Trump, even though he thinks he's doing the right thing. And this is not one of those things where you think, oh my God, he's going to put everybody in jail. It's still nice to know that there's somebody there's like, okay, you know what? He wants to go 100. We'll write 100 on there, right? But we'll only go 65.
Yeah. We'll make him feel like it, right?
I wear a 36-inch waist. He doesn't. He wears a 40. We put 36 on the inside. It makes him feel better. Let's just get over it.
Exactly. So of all the, and this is the funny part, of all of the hysteria about a Trump presidency, I haven't heard one of those people cite monetary policy as the thing that they're freaked out about.
No, it's always tariff because they can basically say, the tariff thing is, you guys are all going to end up paying X amount of dollars more, And I'm just like, geez, you don't understand tariffs. You don't understand that it's, like you said, he's asking for the world because he's expecting for you to meet somewhere in the middle, and he's going to get something he wants. You're going to get a little bit of something you want because he's always looking to make a deal.
Well, yeah. Here's the thing. Nobody learns either. I remember I took a lot of flack in Trump's first term because I was on the – look, I don't generally like tariffs. I'm a big free market, big free economic, I'm a free economy kind of guy. But we didn't have a free economy, and I keep trying to repeat this to everybody. You're not putting on tariffs is one thing, right? Responding to another country's tariffs with matching tariffs, that's totally different. That's evening the playing field, right? And I took a lot of flack, even from people on the right, in Trump's first term, because everybody's freaking out about tariffs. And I was like, guys, you're making a mountain out of a molehill. This is a way to protect American workers and protect the American manufacturing base. That's what this is.
Yeah, they're not letting us sell over there. Right. And you know what? Fine. So, but when you sell over here, we're going to triple the freaking price of your car. So have fun with that.
Well, yeah, and here's the other thing. You're all freaked out about tariffs. You should be more freaked out about the politicians that didn't insist on tariffs. And the reason they didn't is because they were getting multi-million-dollar kickbacks from the Chinese Communist Party. That's why they weren't doing it. Yeah. And that's been one of the biggest things that sucked jobs and created the Rust Belt in America, right, is we've been exporting all of our inflation to China. We've been exporting all the jobs. China sits there and turns around, tariffs our goods, and yet at the same time, we don't tariff theirs and just let
And
them
steals
suck all the
every
jobs.
freaking idea we have.
Right.
Given the chance. They're like, oh, we need to see all your plans. Okay, those are great. Hey, by the way, there's a company opening up a shoe place right across the street called Adidas.
Yeah.
The brand of Four Stripes.
And
you're just
Nukies.
Yeah.
Adidas and Nukies, yeah.
It's freaking crazy. Talking to Zach Abraham, Chief Investment Officer, Bulwark Capital. Between now and, we got about 60 seconds, between now and the end of the year, what do you expect?
Honestly, with this backdrop and this picture outside of just valuations being insane, I think markets are going to continue to move higher, and I would not be surprised if they moved a lot higher. You got to be careful because of the valuations and all that kind of stuff and geopolitical risk. But now, Fed's cutting again, pro-growth policies, corporate tax cuts are going to stay in place. They're going to get renewed. It's just a hard market to bet against, man.
Absolutely. People want to reach out to you. 21st, you got your big webinar coming up, but they want to reach out to you before that. What do they do?
Yeah, give us, the easiest way to do it is give us a call, 866-779-RISK, or go to bulwarkcapitalmanagement.com. You can have a conversation with me, go over your portfolio. In our first meeting, usually takes about 45 minutes. And then second meeting, we show you what we do differently, give you all the information, including the cost, and send you on your way. And if you want to become a client, great. If not, more power to you.
Right on, brother. Appreciate it. You have yourself a good one. We'll talk to you next week.
Investment advisory services offered through Trek Financial LLC, an SEC-registered investment advisor. The opinions expressed in this program are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual or on any specific security. Any references to performance of securities are thought to be materially accurate, and actual performance may differ. Investments involve risk and are not guaranteed. Past performance doesn't guarantee future results. Trek 24308.